The first stock we will look at is Bank of America, ticker symbol BAC. And I've been following the stock for a while now. It is part of my four stocks for 2009. So over the whole year, I'm in a bullish move for it. The stocks we're going to be looking at today are more of a short-term play, something we can play, and trade within a matter of weeks, days, whatever. Anyways, there's two ways I want to look at Bank of America. And before we look, I want to show you the RSI and stochastics. You can see that they both come down below 50, which is pretty much a bearish indicator. So as you can see, the stock at the same time has obviously come down. So that'll play into a role here in this next section. So the first way we're going to play is just a simple support coming into play. You can see with this blue line, it looks like there's a clear support at around 1080 to 11. I would say probably 1180 most, or 1080 most closely, and that stock can easily come down, bounce off 11 or 1080. It's up to you how you want to play that, but obviously that leaves a lot of room right here within $1. Some people might not want to hold, that much risk. It really depends on if you're already in the stock. If you're like holding it from $6 or whatever it was at, then you could probably afford to try to see if you can play this one out. Maybe you want to sell it now and wait to see what happens here. If it bounces, so forth, then you can come back in. The other play I want to look at, you can look at this thing, it's kind of like a ascending triangle. So we'll take this line, you see how all these points connect right here, then with this new latest zone. So you can see we have a little triangle forming here. The break is obviously below 12, is obviously not a good sign here. So a key aspect right here, you want to see what's going to happen at this $12 figure-ish number. If it bounces, that's a good sign. Get back in if you're not in it yet. If you're holding, stay holding. If it goes below 12, that's when you got to make the decision. Do you want to wait till 11? You just want to sell and see what happens, and then come back in once you get some further confirmation. So that is Bank of America. Now we're going to look at Halliburton. And it's pretty simple. We're going to look at RSI and then the full stochastics right down here. And you can see that they both are in oversold territory, meaning that the stock can easily turn around again. There's not too much to read here except for the fact that it looks like Halliburton is currently in a trading zone, which is good if that's the way you play it. You can see right here, actually the 50 and the 200 SMA have met here, so that's kind of a good indicator that this makes this a strong support. So basically what I'm trying to figure out here is if Halliburton comes back down to this blue line, which is about 2090, then look for it to bounce here. If it comes down below, I would sell any position you have. If it bounces, I would get back into it, or add positions, whatever you want to do. That's the quick look at Halliburton. The next stock we're going to look here is Oxygen, ticker symbol OXGN. I've also been following this about the same as Bank of America over the last week. You can see over the last month it's made some great moves, coming from 1 all the way to about 260 in just a matter of a couple weeks. Looking at the RSI and full stochastics, they both are dangling around the 50 level. As long as they can stay above the 50 level, that should keep the bullish sentiment on this stock. Technical wise, there's a couple things we can look here. Has a triangle forming. I originally looked at the stock and had the triangle forming that looked like this. So you can see that we haven't had a clear break yet. We're kind of hugging that top side. You can almost now make it look kind of like this. See some more consolidation happening. Either way, a breakout over 2, which has happened a couple times here and there. But with good volume, we can see a raise of 2 up to 260 again if we wanted to test that. I've been saying for a while now that we should hold the stock about a stop point somewhere between 1.8 1.85. I still hold that point strongly, so anytime the stock dips below 1.85 or 1.8, anywhere between there, I would exit. The next stock we'll look at is AK Steel, ticker symbol AKS. Another one of my stocks for 2009. It's made a great run for most of the year. It's been dangling underneath $10, and I've kind of been getting not frustrated because I knew it would kick in later in the year, but I was getting anxious for the stock just to hurry up and get over 10 already. And now it's made its way all the way up to 21 at one point. Now it's coming back down a little bit to earth, but you can see we're still in a clear uptrend. We've gotten higher highs and higher lows and so forth on throughout this thing, so we should still be good. Has an uptrend mode, but obviously, while the stock has passed the 250, it's been above 50 for a while, but it's passed the 200 SMA, and it's gone some significant ways after passing. And when this happens, you know, you can't expect the stock to go on forever without seeing some sort of pullback. That looks like what's happening right now. There's no real clear way to estimate how low the stock could come back down, but I could say that the stock could easily come back down to the $16 level. I wouldn't be surprised. Anything below that, you might want to consider selling any positions you have, and then using that $16 mark as your entry point again, barring any other moves after that point. Now on to another one of my 4 stocks for 2009. That would be Netflix. Probably the best winner out of all of them. I think it's up 50% already for the year. It was higher, as you can see, but obviously, just like Halliburton or AK Steel, stocks can't keep going up. They got to come back down at some point. So we're experiencing a little bit of a pullback here. Now it looks like we're in a nice little trading zone in here between 27 and 42, or 37 and 42. But what I wanted to point out about this stock is not more of any technical patterns or analysis or anything, more of just something I've noticed with the market in general, is that Netflix seems to be moving in the opposite direction. What I mean is that you notice that for most, I would say, January to probably March, the market was in pretty much a downtrend, solid downtrend, while Netflix was just on a boom going high. Then suddenly the market started to shift, started to go a little bit higher. You see as in April, it suddenly started coming back down to earth. Netflix started going down, the market was actually going up. And now you can see that we're in this little fluctuation. The market on this particular day was down some odd points, and yet the Netflix jumped 2.5 points, or 7%. So that's just one thing I've noticed. It seems that Netflix is a place a lot of people like to go when the market goes down. So that's just, you know, one of your go-to spots you can look to take advantage of in the future. With Schlumberger, I can never say it properly, but it's the last of my 4 stocks for 2009, and this also seen a nice significant run over the last month to 2 months. And basically what I want to point out here is that we've had this run. It's come all the way from 40 to 64 just in the last 2 to 3 months. We're still on a nice little uptrend, so there's not much to worry on that front. But if you want to look at some sort of support, resistance, or whatever, there seems to be a nice little support coming in around 54, over 54 50-ish. So watch out for that. Basically what that means is, because you see we're heading down here in the RSI and stochastics in the oversold territory. So if we can get that to turn around and try to extrapolate those where we think that would happen, we can see 54.80, 54.50-ish has a good point for this to bounce off and move up higher once again. So that's what I would continue to see if you're in Schlumberger, I can never say it. But that will do it for the 6 stocks that are pretty much on my watch list. Some stocks I'm looking close eye on, and I think those stocks should give you something good to look forward to.